At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value. At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
Bismillahirrahmanirrahim. Rabbi shrahli sadri wa yassirli amri wahlul 'uqdatam min lisani yafqahu qawli. Assalamualaikum warahmatullahi wabarakatuh. Greetings and salutations, dear viewers. Welcome to Series 3 of our Sharia Investing Dialogue Series, or SID, for the year 2021. This event is brought to you by Bursa Malaysia, together with our co-organizers, the Association of Sharia Advisors in Islamic Finance, ASAS, and International Sharia Research Academy for Islamic Finance, ISRA. Not to forget our organizing platform partner, Islamic Markets, in making this series an ever success. Nadira with you here today, and I would just like to wish our viewers your best in health, and may all your hard work be blessed and rewarded. Let us all strive to be kinder and more compassionate to one another. Before I begin, I'm happy to introduce Islamic Markets. So Islamic Markets TV is a broadcasting platform for the halal economy where global leaders and market experts come together to share key market insights, the latest developments, and the best practices in the industry. Let me just remind everyone on a few housekeeping notes. If you would like to ask questions, on your right, you'll see a text box where you can submit your questions for the speakers anytime during our live. And for taking notes, you can take notes during our live sessions by looking at your right screen. Click the tab next to ask questions so that you can take notes during the live session. Thank you. Earlier this March, we launched our first SID series for the year, where we discuss on sustainable and responsible investing within the notion of Maqasid al-Sharia. Then in April, we discussed about sustainability and value-based intermediation (VBI) in Islamic capital markets in our SID Series 2. Fret not, you may rewatch all sessions on Islamic Markets live platform to revisit the exchanging of views that you may have missed earlier on. Today, we will be discussing yet another exciting topic with leading industry experts, where we would like to explore Sharia investing as a tool towards financial and social inclusion. Are you ready? Let's go ahead with our first session, Understanding Financial and Social Inclusion in the Context of Islamic Finance. This session will focus on the overview of financial and social inclusion, its latest development, and key observations from both global and domestic point of view, these inclusions from Islamic finance perspective. Our speaker and presenter for this session would be Encik Ahmad Hafiz Abdul Aziz, Financial Sector Specialist from the World Bank. Encik Hafiz is a financial sector specialist with the World Bank Group Inclusive Growth and Sustainable Finance Hub in Malaysia. Encik Hafiz brings with him 15 years of relevant experiences in financial sector development, particularly in the area of Islamic capital markets, Islamic social finance, green and sustainable finance, and financial inclusion. He previously worked as a Principal Assistant Director at the Ministry of International Trade and Industry and as Manager of the Islamic Capital Market at the Securities Commission Malaysia. He holds a master's degree in Islamic Banking and Finance from Bangor University, United Kingdom, which he completed under the Chevening Scholarship, and a Master of Arts in Islamic Revealed Knowledge and Heritage, Fiqh and also Fiqh Honours from International Islamic University, Malaysia. Let us begin session 1 with Encik Hafiz.
Bismillahirrahmanirrahim. Assalamualaikum and a very good afternoon. First of all, I would like to thank Bursa Malaysia and Asas for inviting the World Bank to share on our thought related to the topic, the role of Islamic finance to support financial and social inclusion. This topic is very timely, especially during the pandemic. We'll see how people with the new normal, how the financial inclusion play a significant role for the people to adjusting their life with the new normal. Okay, basically for my presentation, I will cover 6 key areas. Let me start with the definition of financial inclusion. So financial inclusion has as defined by FinDec database, which the World Bank publication every 3 years. The next publication will be in 2022 due to the pandemic. Define financial inclusion as access to and use of formal financial services such as bank account and digital payment. Financial inclusion has many potential development benefits as it can help improve people's income earning potential, thus reducing poverty, improve their ability to manage risk, enable resilience and security during tough time, lower the cost of receiving a payment, allow people to increase spending on necessity, promote saving, encourage a business and personal investment for future growth, boost productivity, and facilitate female empowerment. For government, financial inclusion can reduce corruption and improve efficiency by, for example, improving tax collection and ensuring that social welfare transfer reach their intended recipient with a minimum of leakage and administrative cost. Based on our FinDec data published in 2017, we'll see the growth of adults who have an account. Roughly like 1.2 billion have gotten an account since 2011, including 550 million since 2014. In Malaysia, more than 85% of adults have an account. 1 in 10 Malaysian adults have mobile money account compared to nearly no adult in 2014. 1 in 6 Malaysian young adults has a mobile money account. If you look at in terms of the account ownership, Malaysia, like I mentioned earlier, we reached like 85% the adult have a financial account compared to other countries. Globally, women are less likely than men to have a bank account. Even in Malaysia, men are 5 percentage point than women to have an account. Another data in the Global FinDec database highlight about countries cannot reach universal financial access without inclusive growth. There are 4 key areas that the policy maker, the financial regulator need to address. The younger generation, meaning the age 25 and below. In the education, the group of have an education primary or less, female, and even the poorest group. So these are 4 key groups that the government or policymaker need to address in reducing the gaps in financial inclusion, even for East Asia and Pacific. Who are the unbanked? Nearly half of all unbanked adults live in just 7 economies. Globally, of the 1.7 billion unbanked, 56% are women, with Malaysia like 57%. Other group is poorest people, have a primary education or less, and mostly in the labor force. Even in Malaysia, like 3.5 million in Malaysia are unbanked. Like I mentioned earlier, these are data based on the 2017 data. I believe the next publication that tentatively will publish in 2022 will have a better, clear picture due to pandemic. People change their, we have a new normal. A lot of people leverage a financial account for digital payment, and so forth. Why do 3.5 million in adult in Malaysia have a financial institution account? So one of the reasons is because of not enough money. They give a reason because of the cost. Other reason because a family member already have an account, so they share the account. Distance, especially for the people in the rural area. Only 3% of unbanked Malaysian adult report no need an account. This is, like I mentioned earlier, still the 2017 data. I believe the Malaysian already, I believe maybe more than 90% Malaysian already know the significant to have a bank account, especially during the pandemic, especially when the government also emphasized to transfer money through the digital platform. If you look at the financial inclusion metric for the selected OIC members, so this is we published in our last year report on the financial inclusion in Malaysia. For Malaysia, rank no lower than 7 on any metric. So this metric will wage be paid into an account or card, use of debit or credit card to make a purchase, and having borrow or use a credit card. On all of this metric, Malaysia was bested by several wealthy Persian Gulf countries with large expatriate worker population that typically need to access the financial system in order to send remittance to their home countries. If the special circumstances of this nation are taken into account, Malaysia ranked even more highly. On the other 5 metrics examined, Malaysia was ranked in or near the top decile among OIC members. For example, it was first out of all OIC members in the percentage of adults who save at a financial institution. The next 3 spots were held by high-income countries. It was also in the 3rd place the percentage of adults with financial account or usage of a mobile money service in the past 12 months, bested only slightly by Iran and the highly developed UAE. Likewise, was near the top in the debit and credit card penetration rate, again outdone chiefly by wealthy Middle Eastern oil sector. Religion is not the main issue for Malaysia. This is not compared to other OIC countries. Digital payment use in Malaysia is highly steadily growing. I believe the next publication, the FinTech publication, we will have a more, for Malaysia specifically, will have more penetration in leveraging the digital payment, especially with the new normal. A lot of people relying on digital payment for receiving money and even for e-platform, for instance. So everyone in FinTech hold the key to expanding access to a financial service. So in Malaysia, there are 2 million, still a 2 million unbanked adults, but they have a mobile. So that's why the mobile money play a significant role in advancing the financial inclusion. So this is a key highlight about the global FinTech database, specifically for Malaysia. Digital technology, especially widespread access to cell phone and the internet, is driving access to end use of financial services. Advance in digital financial services, starting with digital payment and including saving, credit, and insurance product delivered through digital platform. Even like today, we have robot advisor for wealth management. The next discussion about social inclusion. So what is a social inclusion? Social inclusion, basically, we give a right for each of the people to have the similar access, either to access to market, space or services. So the process of improving the ability, opportunity, and dignity of people disadvantaged on the basis of their identity to take part in society. In every country, some group confront barriers that prevent them from fully participating in a political, economic, and social life. So this group may be excluded not only through a legal system, land and labor market, but also discriminatory or stigmatizing attitude, belief, or perception. This advantage is often based on a social identity, which may be across the dimension of gender, age, location, occupation, race, ethnicity, religion, citizenship, status, disability, and among other factors. This kind of social exclusion robs individuals of dignity, security, and the opportunity to live a better life unless the root cause of structural exclusion and discrimination are addressed. It will be a challenging to support sustainable, inclusive growth and rapid poverty reduction. The current COVID-19 pandemic has put the spotlight on deep-rooted systemic inequality. As COVID-19 continues to have a wide-reaching impact across the globe, it is important to understand the differentiated and intensified impact the pandemic has on the most marginalized, including persons with disability, women, unemployed youth, the elderly, indigenous people, and ethnic and racial minorities. For example, many persons with disability have underlying health conditions that may make them particularly vulnerable to severe symptoms of COVID-19 if they contract. Women and children are affected by increasing rate of domestic violence as a result of lockdown. In some contexts, racially marginalized groups who have been traditionally excluded from the health system have had higher mortality rates than other groups and have experienced difficulty accessing information about the pandemic, access to equitable care, and access to a vaccine. Social inclusion is the right thing to do, and it also makes good economic sense. Left unaddressed, the exclusion of disadvantaged group can be costly at the individual level. The most commonly measured impact include the loss of wage, lifetime earning, poor education and employment outcomes. Racism and discrimination also have physical and mental health costs. At the national level, the economic cost of social exclusion can be captured by foregone GDP and human capital wealth. Exclusion of the perception of exclusion may cause certain groups to opt out of market services and space, with cost to both individual and the economy. Globally, the loss in human capital wealth due to gender inequality alone is estimated at $160 trillion. Afro-descendants continue to experience significantly higher level of poverty. 90% of children with disability in developing countries do not attend school. Social inclusion is vital to achieving the World Bank Group twin goal of ending extreme poverty and boosting shared prosperity. The World Bank published our environmental and social framework, which apply to all investment project financing by the World Bank. Inclusion is also a priority in the global recovery from the COVID-19 pandemic. Stimulus package for the COVID-19 recovery will need to be designed to counterbalance the widening social gaps and will have to guard against creating a new norm of exclusion. The crisis is also an opportunity to focus on rebuilding more inclusive systems that allow society as a whole to be more resilient to future shocks, whether health, climate, natural disaster, or social unrest. If you look at the sustainable finance framework globally, regionally, and nationally, the policymaker developed, for instance, under the ICMA, the International Capital Market Association, developed the social bond principle specifically to cater for the social group. Even the EU taxonomy also include social as a key pillar, including in the ASEAN. Even in this country like Malaysia, the SRI framework, the value-based intimidation, even Bursa also published the sustainability reporting guide, where the element of social have worked hand in hand with element of environment in ensuring that we include all the society in the same system. Like we discussed about the Islamic finance and financial inclusion. The definition of financial inclusion according to Islamic finance, is not limited to how adults save, invest, borrow, make payment, and manage risk. It also embeds notion of risk sharing and redistribution of wealth, as well as inheritance rules specified in the Quran. Islamic finance has a two-pronged approach to address the issue of financial inclusion. It offers several risk-sharing financing instruments that provide a viable alternative to conventional debt-based financing. This includes a Sharia-compliant microfinance, SME financing, and so forth. In addition, it offers a number of unique redistributive instruments, or can be called as Islamic social finance, such as zakat, wakaf, Nordul Hasan, and so forth, that complement the risk-sharing instruments and can play a vital role in elevating poverty and enhancing the financial inclusion of the population's low-income segment. Zakat, for example, promote financial inclusion by requiring the wealthy to give annual alms to those in need. Importantly, zakat has traditionally been a direct transfer of cash or goods to the recipient rather than providing a service to the recipient. Thus, the cash or goods become the property of the recipient, allow them to participate, even in a modest way, in the financial economy. This is in an important way in which zakat may more directly enhance financial inclusion than other forms of philanthropy that do not entail cash transfer. Although like providing charity is not conventionally seen as financial inclusion, zakat may often be a notable exception when it entails cash transfer through the bank account, including same thing to the wakaf. For instance, the cash wakaf, a good example where this instrument leveraging the financial account for collection and distribution to the recipient. In terms of the regulatory foundation for Islamic finance inclusion, Malaysia have a very good example. The clear Malaysia Financial Inclusion Framework published under the Central Bank of Malaysia, Bank Negara, with the clear four desired outcome, broad strategy and action plan. For Islamic finance, governed by the Islamic Finance Service Act 2013. This is regulation that provide support for financial inclusion. Even for the Islamic social finance, is well regulated by the state institutions. This can be a good example to be replicated to other countries. In terms of the institutional enablers of Islamic finance inclusion, there's two institutions that I want to highlight here, which we highlight in our report. Pilgrimage funds and PNB for the past 40 years play a significant role in promoting financial inclusion, especially for the people in the rural areas. So these are good institutions should be replicated in other countries to highlight the significance to deepening the financial inclusion. Then let's look at the role of fintech in supporting a global financial inclusion. Based on our report, when we published the same with financial inclusion report last year, we identified 9 major fintech trends in 2019, where these play a significant role in promoting financial inclusion. Mostly the Islamic fintech available, the product provide access to finance, including the trade finance, capital market, wealth management, and even takaful. In terms of the classification, mostly dominated by financing, including peer-to-peer and equity crowdfunding. Islamic fintech currently dominated by the Indonesia with 31% compared to other markets. Like the global fintech database mentioned earlier, there is 1.7 billion unbanked retail customer and more than 200 million potential micro, small, and medium enterprise. 50% of these unbanked adults from the Muslim countries. So the huge potential that Islamic fintech can be maximized to reach to this unbanked group through the digital, through the financial technology. These are some examples of fintech used globally that we map with the SDG. You can see in the report for the 17 SDG how these fintech played a significant role in reducing a gap in financial inclusion. If you look at the data in comparison between the high income and IC countries, in many countries, the scaling up of innovative digital approach has enabled financial services to reach a vast number of previously excluded and undeserved households and small businesses. Fintech has also been instrumental in expanding financial access to women and women-owned business, particularly those in rural areas. A key message from our report: Muslim population is young and digitally savvy. There are significant opportunities to use digital technology to expand the reach of Sharia-compliant product and instrument, as well as manage risk and reduce transaction costs. So like we shared earlier, the reason for unbanked people, so basically can be catered through the Islamic fintech in terms of the lack of money, documentation, distance, having an account, and a religious reason. This is a potential opportunity that I believe that the next session will be discussed further. So through the fintech, we can leapfrog the Islamic financial services to reach and impact catering to the digital demography, leveraging AI, data analytics, access to finance through P2P, ETF, ECF, and the trade financing. It also can address significant financial inclusion gaps within a core market. Also can deliver Islamic social financing to support global SDG and need. This is two report. Please scan and download. The next session will discuss further about this topic. If you have any question, please feel free to post your question in the chat box. With that, I end my presentation. Thank you.
Thank you, Encik Hafiz. We will now have a quick break and a friendly reminder to our viewers to complete our feedback survey below in the live update section. We appreciate your comments and we'll be back again for session 2.
Environmental, social, and governance. These are the pivotal aspects we strive to imprint within businesses by integrating sustainable and Sharia-compliant investing principles. We are closing the gap and laying the bridge for a better, sustainable future. Let's embark on this journey by increasing your ESG values with Maybank Global Sustainable Equity I Fund. Maybank, humanizing financial services.
Firman Allah Subhanahu wa taala dalam surah Al-Baqarah ayat 261. Maksudnya, bandingan yakni derma orang-orang yang membelanjakan hartanya pada jalan Allah ialah sama seperti sebiji benih yang tumbuh menerbitkan 7 tangkai. Tiap-tiap tangkai itu pula mengandungi 100 biji. Dan ingatlah, Allah akan melipat gandakan pahala bagi sesiapa yang dikehendakinya, dan Allah Maha Luas rahmat kurnia-Nya, lagi meliputi ilmu pengetahuannya.
Assalamualaikum and welcome back everyone. Let's now start with the second session of SID 2021 Series 3. As usual, the second session of this series will be a panel session where we will discuss on how Islamic finance serves as a catalyst for financial and social inclusion. This session will focus on how Islamic finance addresses issues of financial inclusion, how Islamic finance offers comprehensive approach to critical societal issues, and the importance of ethics for our future. We will be joined by Encik Mohamed Rozani Osman, Senior Financial Sector Specialist from the World Bank as our moderator, alongside 3 other panelists. Encik Shiful Zamri Abdul Aziz, Chief Investment Officer, Maybank Asset Management. Associate Professor Dr. Amir Shaharuddin, Chief Executive Officer from Yayasan Wakaf Malaysia. And Encik Ifran Tarmizi, Chief Executive Officer from Global Sadaqah. Before I handle this session over to Encik Rozani, I will first introduce our moderator and panelist background. Encik Rozani Osman is a Senior Financial Sector Specialist with the World Bank Group Inclusive Growth and Sustainable Finance Hub in Malaysia. He has more than 22 years of experience working in sustainable finance, capital markets, investment management, and treasury. Prior to joining the World Bank, he was the head of Treasury and Liquidity Management at Khazanah Nasional, the sovereign investment fund of Malaysia. He has also headed the fixed income teams at Maybank Investment Management and KLCS Asset Management and managed multi-asset portfolios. He holds a master's degree in business administration from Cornell University's S.C. Johnson Graduate School of Management and a bachelor's degree in electrical engineering from the University of Virginia. Encik Shiful Zamri was appointed as Chief Investment Officer of Maybank Asset Management, MAM, on 17 May 2021. Prior to his appointment, Encik Shiful served as the Chief Investment Officer of Maybank Islamic Asset Management, MIAM, since 2015. He was responsible for overseeing investments across asset classes, together with a team of fund managers at MIAM, to manage and monitor investments, in particular managing pension and institutional funds. He also assisted the head of regional investment in the development of short-term and long-term investment strategies and policies for Maybank Asset Management Group. Encik Shiful has more than 18 years of experience in the fund management industry and is well-versed in debt restructuring, corporate turnarounds, and mergers and acquisitions. His strength lies in his insight to the power sector and toll roads, where most debts for the sector were raised during his career as Senior Vice President of Research and Advisory in Kenanga Investors Berhad and Head of Fund Management Research, RHB Investment Management. He graduated with an honours degree from the Montfort University, United Kingdom, with Bachelor in Accounting and Finance. He is also a holder of CMSRL license. Associate Professor Dr. Amir Shaharuddin is the Chief Executive Officer of Yayasan Wakaf Malaysia since September 2020. He was the Dean of Centre for Postgraduate Studies, University Science Islam Malaysia between 2019 to August 2020, and the Dean of Faculty of Economics and Muamalat between 2013 to 2018. He led 76 academics and 11 administrative staffs and managed a total of 1,881 students. Prof. Amir achieved 35% growth of total number of students in the faculty within 3 years. He also succeeded in developing 5 new academic curricula at undergraduate and postgraduate levels and bringing in 65% of foreign students at postgraduate level. He managed USD 300,000 budget annually, including endowment funds, and is experienced in credit transfer and students' mobility programs with universities from Indonesia, Brunei, Kazakhstan, Oman, and Japan. He is an expert in Islamic finance and is also a member of Sharia Committee in Islamic Financial Institutions. Encik Ifran Tarmizi has over a decade of experience in various organizations within the financial service industry. Prior to joining Global Sadaqah, he was heading a non-governmental organization involved in education and social welfare. He currently serves as the Chief Executive Officer of Global Sadaqah, where he and his team drive an award-winning CSR, Zakat and Wakaf management platform that aims to increase the efficiency, sustainability, and impact of social finance. We will now proceed with the panel sessions as moderated by Encik Rozani.
Assalamualaikum and good afternoon to everyone. Welcome to our session on Islamic finance, a catalyst for financial and social inclusion. It's our hope that this afternoon we would like to be able to offer an insight and highlight the critical importance of financial and social inclusion towards a more transparent, robust, inclusive, and sustainable economy. And we hope to be able to understand the main aim and the biggest obstacles in achieving the objectives of financial inclusion. As our MC earlier has so kindly introduced our speakers, I would like to jump in and go directly into our first round of questions, which hopes to address how Islamic finance faces the issue of financial inclusion, especially in terms of access to finance. I would like to invite our first panelist, Encik Shiful Zamri, to answer this question on how could Islamic finance or Islamic asset management industry sustainably build and drive financial inclusion.
Assalamualaikum. Good afternoon, everyone. Thank you, Rozani. For Malaysia, I guess among ASEAN or OIC or even other middle-income countries, we know that Malaysia stands as a leader in developing its Islamic finance industry, as well as attaining financial inclusion, mainly due to a few pertinent points worth mention here. So one of it, basically, we had a deliberate policy measure since the 1960s, have cultivated Islamic finance as a source of financial inclusion. Now, religious objections to financial participation have essentially been eliminated. What we have now is more discussions around financial participation, looking at making finance, both conventional and Islamic, more accessible to general public. Because we had basically various or probably deep discussion earlier in the days when we look at any religious objections towards Islamic finance, but now the discussion more towards inclusion rather than any of the concern for any religious objections. We have strong leadership from financial regulators to drive overall financial inclusion. Regulatory initiative with clear targets and tracking of milestones have pushed Malaysia to rank well in this regard. So we have standardized and comprehensive frameworks for consumer and investor protections. That is the key to ensure that clarity of purpose when we promote financial inclusions. That is very key. Malaysia's framework for consumer and investor protections cover both Islamic and also conventional products. So we have dedicated institutions that have grown out of this, raising confidence and promoting financial inclusions. For example, we have Tabung Haji that turn religious belief into an avenue for financial inclusions by incentivizing savings for the pilgrimage in Mecca. PNB or Pemodalan Nasional Berhad as well, mandated with this redistribution of wealth through affirmative action, provided preferential shares allocations to participating Bumi Putra. FELDA or Federal Land Development Authority also allowed land ownership through designated holdings and land for agriculture cultivation. So we have other Islamic social finance as a central element in utilizing wakaf funds for social development as well. So redistributive instruments such as zakat, sedekah, wakaf, qadr hasan, complement risk-sharing investment instruments to target the poor sectors of society to offer a comprehensive approach to eradicate poverty and to build a healthy and vibrant economy.
Thank you, Encik Shiful. Now, I'd like to ask a similar question to Dr. Amir Shaharuddin. In your opinion, what are the challenges of financial inclusion among the low-income earners, including those under the B40 income classification in Malaysia?
Thank you, Mr. Rozani, my colleague Shiful, and also Brother Ifran. I think we have heard that in terms of in Malaysia, we do quite well about the issue of financial inclusion and social inclusion. As presented by Encik Hafiz, the rate of our population that financially include is quite high, 85%. And this, I think, goes to the very strong drive by our regulator, by Bank Negara and all Islamic financial institutions in Malaysia. So, however, I think the issue remains with this segment, the B40 that we usually terms in Malaysia, the low earners income in Malaysia. So I remember, when we talk about B40, we refer to the small farmers, these small hawkers, and also those who run micro businesses. So I remember when we do a lot of, giving financial assistance to this group who are badly affected by COVID-19. Still, they are suffering, and they are suffering from, losing their income during this COVID, and also they are bearing high debts. I remember when we distribute financial assistance to the school drivers, school drivers van. So they are not losing their income, but also they are suffering from debt. And when we ask them from where they get the loan, they said that they get loan from Along or Loan Shark. So, they don't enjoy the moratorium that most of us in Malaysia enjoy during this pandemic. This is to address the issue of, financial inclusion. We still have those who are not really, go to the normal banks to get financing or to get extra money when they are needed. So this is the issue as why this situation is still happening in Malaysia. So I believe one of the main issue is the knowledge, the financial literacy. This is that we need to tackle. And based on my conversation with this segment of people, they also have a problem of, they face problem of bad experience when they want to ask for financing from bank. I think this reflect that our Islamic banking, our Islamic bankers, we need to rethink about our operation. Do we really address this issue? Do we really we do have enough or sufficient products to address the needs of this segment? So I think this is what is lacking in our that we can improve further in our ecosystem of financial ecosystem. Thank you, Rozani.
Thank you very much, Dr. Amir. My next question goes to Encik Efran Tarmizi, CEO of Global Sadaqah. Do you think financial inclusion can be achieved successfully, and how would you measure this success?
Bismillah, alhamdulillah, wassalatu wassalamu ala rasulillah, ma ba'd. Afternoon to everyone, fellow speakers and participants. I think even before going to that question, if you don't mind, I would like to just share some of my thoughts, and I think it's echoing also Dr. Amir's thoughts on the current state, globally in Malaysia. I won't be able to fully capture the current state, of the globe or Malaysia, as Mr. Hafiz has shared some valuable data earlier. But I could perhaps share some observations that will lead towards that question from my little experience. So, we all observe that globally that there are many in need of access to finance in many forms. And however, many of them are unfortunately in countries where our traditional money transfer options do not allow or restrict these transfers to begin with. So, I can mention some of these countries at the top of my head. I'm sure many have had difficulties transferring to those in need. Palestine, Syria, Honduras, Guatemala, and for example, and specifically now back to Malaysia. Likewise, also Dr. Amir mentioned, I've seen many individuals out there within our communities where they just need short-term loans, even as low as 1,500 ringgit to kickstart and to add on to their existing micro businesses. And, these guys are definitely affected by the pandemic. And I've even seen those as young as 18 years old who want access to this particular kind of product to help their family. So the next question is, where would an 18-year-old get a 1,500 ringgit loan? So one challenge is definitely that there aren't many institutions, as Dr. Amir mentioned, out there to help these individuals. And perhaps, they're micro entrepreneurs, no credit history, perhaps too risky based on our credit scoring methods. So, we have, and we will have many of these cases where we're assisting to help them in terms of, interest-free loans, called Hassan. And, we have partners on the ground that will match them to manufacturer products, build up their business skills, boost their income, and eventually their ability to repay. So in addition to that, there's a lot of technology that we're exploring towards capturing credit history for these applicants, via an alternative credit scoring system. So we have to make it simple to track data from within their phones, generate that credit history, where eventually be accepted by institutions. So can it be achieved successfully, financial inclusion? I think yes, inshallah. And how do we measure? I'm not the most qualified person to assess this, and the World Bank has laid out some, really relevant data to compare, these measures in different countries. But for me, and I'm really, at the very, probably at the lower end of the whole ecosystem, when I see individuals I mentioned earlier, and they are increasing their income by a certain level, and we're able to empower them to repay, to pay it forward, to pay zakah one day, for me, I'm going to celebrate that as my little success. So I think that's my, background to that point. Thank you, Mr. Rosani.
Before that, Rosani, can I add to Irfan points? Because I'm representing Wakaf institution and Zakat institution. We believe that when we collect Zakat or Wakaf from our donors and Zakat payers from T20 or M40, we don't have issues with them, with this group of people in our financial inclusion, because they pay Zakat, they pay Wakaf through banks, online banking, so that's fine. But I think what we can improve from our perspective, Zakat institution and Wakaf institution, is that when we distribute the money, the Zakat or cash Wakaf to the beneficiaries, we tend to distribute by using cash. This is the current situation in Malaysia. So I think to improve the financial inclusion, we should move towards giving, by using bank account. This is something that I believe we need to improve.
Agreed. Yeah.
Thank you very much, Dr. Amir and Ifran. Now, I'd like to remind the audience that please feel free to send in your questions. We would really appreciate your questions, and we'll strive to answer them as best as we can. Now, I'd like to take this opportunity to go into a second round of questions for our panelists, to Encik Sheful first. And we want to cover a topic on how Islamic finance could offer a comprehensive approach to poverty eradication and redistribution of wealth among the society. So this question specifically for Encik Sheful is, what is the role of the financial industry or the Islamic asset management industry, particularly the Maybank Group and Maybank Asset Management, in promoting Sharia investing to intensify social inclusion?
Okay, thanks, Rosani. First of all, in terms of Islamic asset management industry, we have we have been doing this business, asset management, for many years or decades already. Of course, it started off with the normal conventional, and then Islamic asset management becoming more hot topics. In fact, demand for Islamic asset management is growing faster than your conventional asset management products. So as far as the social inclusion is concerned, I think what we are doing now is more of try to engage or maximize or be more effective in the wealth redistribution from our industry perspective. I think, as you know, Islamic asset management also contribute quite significant amount of purification money from the non-Sharia income portion as a result of any reclassification of assets under our management to Islamic social finance as well as charitable organizations. So that is one of the source of funds that we can really share and redistribute back to the societies from our activities of Islamic asset management. So the usage of this, of course, Islamic social finance is properly implemented. It can play major roles towards the unemployment, poverty eradication, and eventually contributes towards the social economic progress and Muslim communities. So what we are doing now, I think you saw our videos earlier where we launched the Wakaf funds. We work with this other institution, the what you call the social Islamic institution that provide more structured distribution. Because if we were to do it ourselves in terms of redistribution of this wealth through zakat or wakaf, it may take a long way. So we will rather work with these professionals or institutions that are doing it already, so that we can basically maximize the inclusion to the people at large. So that's one thing that we are doing. Of course, the other thing, we are always promoting other products or probably expanding our offerings to investors. Not just our CAF, we also are promoting like ESG type of funds or global assets or Islamic global assets as well, rather than just focusing on Malaysia. So we want to make sure that the investors are not just getting returns from investment in Malaysia, but also globally. And then whatever returns or income that we are getting from these investments be shared with the society at large. So that's our strategy or our contribution to this cause for inclusion. I think just to touch a bit more on this Wakaf fund that we launched earlier. This fund is quite new. We just launched this fund in May 2021, this year. So I think it came about because SC already came up with the Wakaf guideline, Wakaf fund guideline. So we take this opportunity to provide these funds to investors, so that they can contribute some parts of their income distribution for wakaf activities to the society. So in a way, it's already embedded in the funds, rather than the investor themselves have to go through their own way of distributing via wakaf. So it's already embedded. The fund manager will help to manage the distribution at our end. Okay, so with that in mind, basically, we developed this as part of our Maybank Assets effort to strengthen and expand this related to wakaf. Okay, so in terms of this, we see more and more Islamic financial institutions in Malaysia are playing the roles towards this wakaf development as well. Not just us. I think you can see some other asset management companies also doing their part in supporting the activities that have been approved by SC, and then we will try to ensure that this is implemented accordingly, so that we can have a better financial and social inclusion with the rest of the players in the market. Okay.
Thank you, Encik Shiful. I would like to ask Dr. Amir another round of questions on a similar topic of how Encik Shiful have answered. And this question is, how could the Islamic finance industry offer and contribute to the society with regard to wakaf instrument as part of the distribution of wealth? And are there any cross-industry collaboration that could potentially enhance the development of wakaf?
Yeah, okay. I believe this is a very good question. If we look at the development of Islamic finance, we started in Malaysia especially to develop these commercial Islamic banking products. We created and offered to the public like home financing, vehicle financing, and then we move on to sukuk industry. But now I believe people ask about this social finance, Islamic social finance come up. And then in terms of Islamic social finance, the main component of it is zakat and wakaf. So Alhamdulillah, in Malaysia, we already success in developing our zakat sector. By 2019, our zakat collection overall in Malaysia, we have reached to 3 billion ringgit. So this is to me, is a huge, significant amount of money. And we managed to develop our zakat sector for the past 2 decades, Alhamdulillah. But if we compare to the development of wakaf, still very small, because our zakat, especially in cash wakaf, we do not reach to a significant amount that we can celebrate and we can proud of. So that's why, to me, the collaboration or effort from Islamic finance institution to support wakaf sector is very, very needed and important. But Alhamdulillah, as mentioned by Encik Shiful, we started already, for example, like Maybank Asset Management, come out with a product that combine between investment and also part of it can be donated as wakaf. So also we have like Kenanga and also other investment companies to come out to support wakaf. I just want to share that in Malaysia, actually, the development of wakaf asset, mainly our source of funding come from 2 sources. One is from government grant, and also second is from public cash wakaf from public. So as we know that to rely on grant from government is not sustainable, and also from public donation, public wakaf, still the amount is very small. So that's why we need something. We need the involvement, more effort and more progressive involvement from our Islamic financial institution to support the development of wakaf. So far, Alhamdulillah, we have already started, but we still yet to see, like for example, the issuance of sukuk for wakaf project. So we are champion in Malaysia, we are champion in wakaf in sukuk, but not yet to see this sukuk, for example, sukuk for wakaf development. So I believe, inshallah, we can concentrate on that. And also, I think the issue of cross industry collaboration, yes, it's very possible. For example, we are working, for example, now a wakaf project to build a green mosque, where we have a combination between the technology to save energy for our mosque, to save water, and to build a solar panel to our mosque. Then it can generate efficient energy to our consumption. So I think with this, for example, our imam, our mosque, we need to have a collaborative effort between the industry people, the technology people, and then we can promote wakaf for a better future, inshallah.
Thank you, Dr. Amir. I'd like to pass on the next question to Encik Ifran, which is, in your opinion, how could Sharia investing contribute to social inclusion?
Right, good question. But before that, I think, if there's opportunity, Dr. Amir, let's have a chat. I think we can get our platform to get some international donors for the Green Masjid. That sounds very good, and for the long-term sustainability of in many aspects, environment, and to help the whole community of the masjid. And I think I'll take a step back, going back to these social finance products before going into the investment, and how we can help them ensure sustainability and towards an inclusive economy. So back to the earlier examples I shared, these underbanked people are now finally able to expand their businesses, raise their income, and more importantly, when we empower them to repay, we're able to circulate the original fund for a few more cycles, and that's sustainability for the person itself and also for the funds. So there'll be a longer usage. And, going back to just simple sadaqah, when we channel it, and this is addressing how we can remove, poverty, remove poverty, inshallah, we channel it towards education, be it in the form of laptops to underprivileged students during the lockdown, helping those who can't afford tuition fees or college accommodation. Through education is how we hope to assist in poverty eradication, but it's a long-term journey. And this is where we give the opportunity for the generations to break out of the cycle within their families. But now leading to that question, unfortunately, from my observations, the general public, the individuals, they don't seem to support education causes as much compared to the other causes, feeding the poor and such. So first and foremost, I think this is definitely one area where Sharia investments could focus and assist on. And I know I'm not in the investment sector, as you can tell, but I've observed that when investors prosper and they already had ethical, social impact in mind, they are also the strongest contributors towards social causes. And this is from our own experiences within the group. So from that angle, Sharia investing by default, it's more holistic, it's ethical, and as opposed to just purely looking at returns, it already attracts the right kind of mindset that I say immediately assists social inclusion and has that potential. So, in short, investment products that have a social element to it, it would, definitely assist in social inclusion. And I think there are many opportunities for us to explore. And inshallah, this is some of the ideas in a pipeline where we want to involve investors and maybe, partially also donors towards funding development, developing underutilized Waqaf land, state land. So this is where, inshallah, there'll be some element of return. At the same time, social inclusion through the impact from that investment product. Thank you, Sheikh Rozani.
Thank you very much, Ifran.
Rozani, still, I want to add to Irfan's comment. Yeah, I want to echo Irfan's comment about this motivation or behavior of our donors and Waqif. Yes, I agree, because most of our Waqif or donors in cash Waqaf, they still have what we call a traditional understanding of Waqaf. Because when we, for example, promote Waqaf for mosque, Waqaf for surah, Waqaf for, we got a lot of support and a lot of donation compared to other like Waqaf for, like education, Waqaf for green technology. So so still, I think the mindset and the understanding of Waqaf need to be improved and need to be enhanced. I'm not sure, but I think because maybe a lot of people just think the reward, the pahala only goes when they donate to mosque for the religious purposes.
Yes.
So that is one of the issues.
I agree, Dr. Amir. We have the same observations that, we have to change the mindset that Waqaf is not just masjid or I have to have a big land and give it to the majlis. There are many, which we have also explored, but you're right. This is where the awareness has to come in. We have to work together, Dr. Amir. I think we have to build awareness for Malaysia and globally here.
Yeah, I think probably I can add also in terms like how the behavior of investors when it comes to donations or doing goods to the environment, to the people, and then. So in our case, when we look at the behavior in terms of demand for product, for example, in investment, of course, when somebody want to invest, it normally was started with basic products, equities, fixed income, or sukuk for that matter. But over time, people start to demand for more than just investment. They want to do goods with the investments. For example, 2 years ago, we launched a very powerful sustainable unit trust product called Maybank Global Sustainable Equity. So this product is very unique. It's not just Sharia compliance. It's also sustainable in nature, meaning that we combine both good screening elements to give a very strong underlying companies that doing goods to the world, that basically behaving in a good manner. I mean, they are not basically damaging stuff or environment and so on, and then promoting good things that they are doing. So investors also they are doing their parts in a good way in investing in people companies that are doing good to the world. That's what I'm saying, is that it's not sometimes it's not a direct contribution that they're doing, but their action is also translating into their investment behavior as well. Because those are the things that also counts when it comes to investment, because they're already moving up their value chain in terms of investment. Probably they already got their basic return that they needed, but beyond that is something that they want to do good for the world as well.
Absolutely.
Yeah.
You don't want me just adding, like, it's somewhat on a related note, but of course there is an ongoing Sharia discussion regarding this, and this is my personal observation, at least from our experience. As you know, we've enabled like cryptocurrencies as a form of donation on our platform since last year, and these people who initially went into these digital assets as investors, that was probably their initial reason why they went into it. But eventually, these are also the people who have contributed a lot towards donations. And I'm not, going to go into the whole Sharia discussions, but they do have that profile where, even some of them, and many of them are our fellow Muslim brothers and sisters, where after a while, at the point when the value went up, they're looking to pay the zakah on their digital assets, and they need to find, avenues to do that. So, there's also that, that element of investment that led towards social inclusion. Just throwing that thought.
Yeah.
Thank you very much. Very interesting to have a conversation. This free flow conversation is very interesting, and it allows for greater sharing of ideas. Now, I do have some audience questions. Some of them are a bit similar, so I'll do my best to sort of merge them together. I think we've heard during our first round of questions on how there is a big gap that's being faced, especially from the B40 group in terms of accessing finance. Now, we all know that Malaysia has made great progress in recent years in terms of financial inclusion. Now, going forward, given that we do have this big gap, what should be the focus of the government or the private sector in the coming years to enhance both financial and social inclusion further? Could it be by the by the federal government, or is it the state level government? Could it be by religious authorities, or could it be something that that the private sector could take the lead on? I would like to open it up to our panelists, to whoever wants to answer first.
Rozani, I think probably I can take this one first, because we are already doing this as far as the Maybank asset is concerned. As you know, we have a product called Amanah Hartanah Bumi Putra. Okay, this is a product with an agenda, because I think we know as a Bumi Putra, our ownership of properties in the prime location are very small. I think Khazanah probably have some research before. I think less than 5% of the property in the prime area is owned by Bumi Putra. So what we did is basically we worked together with Pemodalan Hartanah Bumi Putra, Pelaburan Hartanah Bumi Putra. Is actually is spin off from PNB as well. The people from PNB came together, creating this fund called Amanah Hartanah Bumi Putra. Main objective, of course, the inclusion of all the B40, M40, because if you want to expect this B40, M40 to own properties in prime area in KL, Penang, or Johor, I think it's going to take long way to get there. So what we did is basically creating a fund, Amanah Hartanah Bumi Putra funds, that own these properties. And then investors can be as small as 100 ringgit. So it can be B40 or students for that matter, invest in this fund. And then we will basically provide a regular income stream on annual, basically we pay out every 6 months rather than annual. So how do we get this kind of returns for the dividend distribution? Basically, we do the ijarah rental with the sponsor, Pelaburan Hartanah Bumi Putra. So with that, basically we are covering all spectrum of market from the B40 up to T20 who can invest in these funds. Because, like I mentioned, if we want to have a inclusion from all people walk of life, so we need to have a product so that is accessible, economical enough, is cheap enough for them to access, and then it's easy for them to understand. So in this case, they are investing even the small money, 100 ringgit or 1,000 ringgit, with regular income stream. Let's say 4 to 5% every year. They can match this with the ASB for that matter. And then the price is fixed at RM1. So this is something that we try to promote, and then we try to include the investors from the top to the bottom B40 that we mentioned. So that is the way how do we do it. And then this fund is dynamic. We can grow this fund. So long we have more assets to be injected into the fund, we can open up to more people to invest in this fund. So that is one of the initiative, and it is still ongoing for us to basically provide this inclusion to basically all people, all walks of life in this Malaysia, Bumi Putra, for example.
Okay. Thank you, Encik Shiful. Dr. Amir or Encik Efran, do you have any comments on my earlier question?
Yeah, I think we in Malaysia, we do not need any more policy, to eradicate poverty. What we really need is to check the implementation to make sure that the target market is achieved, and also, the financial assistance arrive at the target market. So this is what really we are looking for. And also the other one is the coordination. Because in Malaysia, there are many of agencies who drive the financial assistance, but lack of weak coordination among us.
Agree.
So I take it from your comments, we already have a lot of the good policies and plans. We just need to implement it better and coordinate better in order to achieve the results. Okay. There's another audience question here. Regarding the pandemic and its impact. Now, I think they're related. I think we can try to answer both questions at the same time. One is, how did previous financial and social inclusion efforts help to alleviate the effect of the pandemic? And then the other question that's related to that is, how did the pandemic impact the rate of bankability in Malaysia? Did we see more people going to use banks or not, basically? Anyone like to answer?
Perhaps you need someone from the bank. I mean, I have to say, like, I can't say for sure whether they're going to the bank, but I can definitely say they are definitely in need, and they're looking towards other avenues. And I know just now Dr. Amir mentioned, unfortunately, some of them have to go to the loans, the loan sharks and all. But, alhamdulillah, I think from what I observed throughout the pandemic, we actually received a lot more support even prior to the whole outbreak. So people are out there helping, and this has been sort of like the interim help in addition to what the government has done. But I kind of doubted that more of them are going to the banks. But do correct me if I'm wrong. But this is where I mentioned earlier. But many of them still need, those financial assistance in the form of like Qard Hasan, and even very small amounts. And this is where, like, we are coordinating with our partners to assist those in need. And we're seeing, various, kind of difficulties out there. So I like to summarize that they're perhaps not increasing their banking products, but they are definitely, requiring these kind of short-term assistance, no doubt.
I have a follow-up question to that in terms of your view. I know earlier was mentioned a lot of people going to alongs and loan sharks for short-term loans. That could end up having major repercussions down the road as a result of the pandemic. Now, do you think they are going there because they don't have the knowledge, the financial literacy level, to be aware of other options that are available to them, or simply they are literate? Financially literate. It's just that they've run out of options, in the sense that the options that we have available just do not meet their needs.
Yeah, from my observations, of course, Dr. Amir, he has shared some. It's not because of the lack of awareness, meaning they are probably aware that many products out there in the banks, you see it everywhere on your billboards and, in your phones, in your social media feeds. But the many that I've seen, and I've mentioned like one example, that is a real life example. Like, where would an 18-year-old go for a short-term financing of 1,500 ringgit? So it's the access to these kind of products. And unfortunately, many of these smaller entrepreneurs, micro entrepreneurs, they are left with no options. And for them, okay, they've probably not reached the stage, many of them, that they are, being threatened, their lives have been threatened, but they have no choice but to accept the high exorbitant, interest rates, because that's their only option at the moment. So this is my little observations. I look forward to the other panelists' observations.
That's very interesting, Irfan. I think probably I want to add to that point. My observation on these issues where people still going to Along or loan shark. What I can see is that totally agree with Irfan that the probably the bottom of the society, even the smaller amount like 1,000, 2,000, it's very difficult for them to get that kind of help. And then we saw how government tried to support in a way, providing easy loan or easy financing to them via pinjaman community. But that also is tantamount to kind of a legitimate along as well, because the rate is so high. So that kind of 1.5% per month is equivalent to your credit card rates already. For me, it doesn't really make sense. As far as my observation is concerned, I would expect, the authorities, the administrations to do more in terms of providing this so-called social safety net to the bottom society that are really in need, especially during the pandemic, actually.
Rosadi, like just a small point from me. When we see this kind of segment and these B40 or those who don't have unstable income, when they go to bank, they are required to provide document, collateral, and the track record, all this. So this kind of assessment put them away from bank. Because when we apply the same procedure, the same method to them, of course they will not pass our credit assessment. So that's why they go the easier way. The easier way is to go to loan shark.
Yeah, and just to add, I mean, inshallah, a solution that we are exploring and working into. I briefly mentioned earlier, but maybe just to elaborate further, we are hoping to develop a method where it's straightforward for first and foremost for them to apply within your phones. You got to make it simple. Open up an app, apply for such and such amounts of Qard Hasan. But the fact that this app would have some sort of collection of data, your geolocation, your a certain amount of activity, whether you are actually someone who is going to be a credible paymaster. So we hope these kind of alternative credit scoring methods will be eventually the funnel that feeds towards the existing traditional financial institutions. But we need to develop this first. So, I mean, these are things that we are exploring. Hopefully, we do receive the kind of support to develop this to be that funnel, as Dr. Amin said. Currently, they don't have credit history, but we can build that, but we can use the same traditional methods. So, I mean, one clear example, our partner has mentioned how we can track, various ways. I mean, if a person is requesting for such and such funds and, they're supposed to be utilizing it for their business, but you are able to capture that they're spending like 10 hours on TikTok, for example, right? Then, that can already tell you upfront, this is not going to be a good person for even your traditional products. But these are the kind of technologies that we have to invest into.
Thank you. I think one of my key takeaways from this is that we have our people have the literacy. They are aware of what's available out there. It's just that what's available out there doesn't really meet their needs. And it's ironic that the people who need the money the most have the most difficulty in accessing the finance, whereas the people who have funding can access finance so easily. Right. Yeah. So perhaps an idea that might, from my point of view, might be beneficial in the future is some form of microfinancing facility that's more social oriented and allows the people who need the most access to cheaper funding that would help them the best. Well, we are running out of time, so I would like to look towards the closing of this session. But how I would like to do that is like to invite all three of you to spend a couple of minutes each to give your key takeaways from this section. What are the key things that you think were worthy of being highlighted as a major point? I'll go to Encik Shiful first.
Thanks, Rozani. So basically, my key takeaways from these discussions, I would say each of us have our role to play, be it on the financing side, the investment side, or distribution side. Okay. As far as I'm concerned, myself are in the investment fraternity. We need to try to ensure that whatever offerings that we are provide to the market is easily accessible, economical enough to all investors. To even though they are small, they're just growing up their wealth, but they have an avenue to participate. I think like what I mentioned just now, we do have funds that targeted to certain sectors that we know. We want to make sure that there's enough social inclusion, not just targeting to the wealthy when it comes to investment. We do understand that we need to make sure that financial inclusion of all people in investing, probably they can start small. And the other part is that we want to make sure that whatever processes or activities that we do within Islamic asset management, for example, via purification money that we have, we can probably have more efficiency in redistribution back to the society via zakat or via wakaf to probably direct to more professional handler like Yayasan Wakaf, for example. Thank you.
Thank you, Shiful. Over to you, Dr. Amir.
All right, thank you. It's a very good discussion to this session. So from Wakaf point of view, many have said that Wakaf has a great potential to become the third sector of our economy, but this potential is yet to be fully optimized and fully utilized. One of the reasons is because of the engagement between Islamic financial sector and the Wakaf sector is not so jive and so close. So from my personal view, I like to see that more and more Islamic financial product to be included and embedded with Wakaf features. I hope to see that Bursa Malaysia, for example, can create, Wakaf featured element in the equity investment. And also because Wakaf have a long-term features. So really, it's in line with SDG goals because the focus of Wakaf is for the long term. It's not like zakat. Zakat is short term. When we collect zakat this year, we have to distribute zakat. But for Wakaf, when we collect Wakaf, what we distribute is the proceed from the Wakaf capital. We remain the Wakaf capital and we invest the Wakaf capital, but we distribute is the proceed of the Wakaf investment. So that's why I think when we talk about Sharia investing, Wakaf is one of the core elements for Islamic social finance. Thank you very much.
Thank you, Dr. Amir. Over to you, Encik Ifran.
I was going to say everyone has summarized all the great points and left me with very little to say, but let me try to summarize from my perspective. So we now live in a society where, we have spent most of the past year not leaving our homes. And many are probably going to remain this way for the months or years to come. Physical travel will still be somewhat limited compared to before. People who need access to finance are not going to reduce anytime soon. So I feel, we need to invest in technology. Firstly, to remain relevant in the industry. And secondly, because, to be able to reach out to more people within our communities who won't be able to come to, our regular branches, offices physically, but they have access to devices, most of them. So we have a lot more to do. And I urge the participants, individuals, corporates, we come together. We need to collaborate, complement rather than compete for us to achieve this greater good. Because, we have many great non-profit organizations and organizations such as, Yayasan Wakaf Malaysia, who are making a huge impact to our society. But however, many have not been able to bridge the gap of receiving support from people globally. So I think this is where we have to come in to collaborate with these partners to assist with that. Receiving support from around the globe towards social causes in many countries, including Malaysia, for example. And whether we like it or not, there are many people around the world, even Malaysians, who are invested in digital assets, cryptocurrencies, and they are very generous. But likewise, many non-profit organizations have not been able to bridge the gap to receive support directly from them. I mentioned earlier, we have enabled this for the past year, and we've seen the amount of support that we are potentially, we could receive even more. So in summary, we need to build convenience at your fingertips. We've been able to reach supporters from more than 80 countries around the world to help people from different parts of the world. And it's all within your phone or device while working from home. So on that note, I look forward to connecting with relevant parties to have this discussion, inshallah. Thank you very much.
Thank you, Jeffran. I'd like to say a big round of thank you to our esteemed panelists for contributing your ideas and your thoughts today. With that, I would like to hand back over to the organizing team. Thank you very much, everyone.
Thank you very much.
Thank you to our moderator and panelists for session 2, and we hope that you find it just as interesting as we did. That marks the end of Sharia Investing Dialogue 2021 Series 3. I'd like to share a few reminders before we leave. For upcoming sessions, you can see below on your right the past and upcoming sessions. You can set a reminder so as not to miss any of the future sessions. Feedback survey. Make sure to leave your rating and feedback by filling up the survey form below under the live update sections. We appreciate your comments on how we can improve our future events. Watch again. You can watch again this session and all past sessions on www.islamicmarkets.com. On behalf of the organizers, Bursa Malaysia, Asas and ISRA, we would like to thank the World Bank, Maybank Asset Management, Yayasan Wakaf Malaysia and Global Sadaqah for making this session a success. We would also like to thank Islamic Markets for hosting the SID 2021 on its live platform. We hope that this session has given you a richer understanding and interest on Islamic capital markets, and we hope to see you again in our next series. Subhanakallahumma wa bihamdika asyhadu an la ilaha illa anta astaghfiruka wa atubu ilaik. Assalamualaikum warahmatullahi wabarakatuh. Have a good day ahead.